Hey traders, this is Blake Morrow with Traders Summit, and I have with me for the very first time Helene Meisler. She is a daily contributor. She has a daily column at realmoney.com, but she's got a very great past on Wall Street at Cowen and at Goldman. And Helene, you are a legend on social media, on Twitter. You and I have been following each other for years. I'm so excited to have you here today. So welcome.
Thanks. Great to be here with you.
Yeah, so I think a lot of people know you from Twitter. You got a big following. You and I have been following each other for years. And one of the things I've always appreciated about following you, I'm going to say it's getting close to a decade. You and I have been on Twitter and I've been following you. We've communicated a lot. One of the things I love most about you, though, is you're so consistent in the way you look at the markets. You keep it simple. You look at the same stuff. There's a lot to be said for that, isn't there?
Well, for someone who's as old as I am, I mean, I've been doing this for nearly 40 years. I don't deviate very much. My routine is fairly the same every single day in terms of what I look at in the markets. I've added things over the years. I can tell you I've subtracted very little because as much as people might say, well, this doesn't matter anymore, that doesn't matter anymore. The one thing I've learned is every time you say it's different this time, it's never different that time. And so to me, I think being consistent is probably the best path to success. And obviously, if you keep losing money and being consistent that way, then that's not good. You need to change something.
Right.
But if you've done something and you stuck with it and it works, if it's not broke, don't fix it.
It's a great point. Whenever, as traders, we all have our own struggles. We have our ups and downs. You have your hot, then you're cold. And one of the things that I've always realized whenever, now markets do change as you know, and you pointed out, markets change. You have to make some tweaks here and there. But usually there's a core group of rules that you sit back and you follow that you're like, hey, when things aren't working for me, I just go back to the basics. And it's you and I, before we started this interview, I looked on the back of your wall there in your office, and I see a chart taped together. That is amazing because, coming from somebody like myself, back when I first started trading in the mid 90s, I used to actually have to print out all my charts. We didn't have all these fancy, internet graphs and tools. We all had to draw everything, right?
We didn't have PCs when I got in the business.
No, I mean, come on. So you've seen the whole evolution over the years. I mean, what happened when you got your first pager, Helene?
I never had a pager.
Okay.
But I did have a flip phone I loved.
Of course. You probably had a Motorola StarTAC. You were a StarTAC type of lady, weren't you?
I was a Nokia girl.
Oh gosh. Well, tell me though, when it's funny, but I find such great comfort in it when I see you post on Twitter. Sometimes you'll post your chart, you use your drawing tools, you got a tool, you use you're looking at everything and you're taking pictures of it with your cell phone, showing people what you do, but it hasn't changed. And that's the point that I think I'm trying to drive home here is you do the same type of, let's call it boring. You do the same type of boring analysis every day and you don't change it up. How have you been able to manage to do that over the years?
Well, first of all, when I first got in business, I joke that there were no PCs, but there really weren't. We had a Quotron on our desk, and a Quotron literally gave you quotes. That was it. You couldn't even pull up news when I first got in the business. I remember when you were able to get news recall on the Quotron. It was such a big deal. So imagine you just didn't have computerized charts. And so we would do, I'll even show you. This is what the charts that you see on the screen, this is what I do every day. And that's how we did it. And so, then we got computers and I thought maybe I should give it up. And I didn't give it up. And then in 1996, my husband and I moved to Singapore, and I quit working on Wall Street and off we went. And I was just going to sit around and trade. And of course, because of the time difference and dial up and,
Right.
So I thought, well, I'll just look at charts online, even though, God, it was so hard during dial up time, but I did, and so for the first month, I didn't post my charts. I left them sitting in a pile. 1 month in, I'm like, I have no idea what's going on in the market. I have no idea. And I pulled the charts out and I had a month missing. And I swear to you, I sat and I posted every single chart that I'd missed for that last month. And I've never stopped since. So I did try giving it up and moving to technology, and it just didn't work for me.
Well,
now, obviously, we're broadband now and high speed, but so I look at charts online, but to me, there is a certain feeling that you get from putting the pencil to the paper.
Yeah. Well, at least you don't have to wait for that silly dial-up fax machine noise, as you're waiting for your 3 hours of charts to download, which, for me, I do recall those days of multiple hours of waiting for everything to download. Then you get to print it all out. So it's hours of process. So at least it's quicker nowadays, right?
Yeah. I mean, it's quicker. You also, I'll give you an example. I had thought that we'd rally this week, Tuesday or Wednesday, or Wednesday. And so needless to say, I came in yesterday, not particularly happy because of Tuesday. And then we got the rally yesterday. But I put my pencil to the paper thinking things were going to look very different. They didn't look that much different. I mean, yeah, you had reversals, but nothing changed the charts that you're looking at, that you're putting the pencil to the paper. And I really thought, in my heart of hearts, I was going to see something terribly different, and I didn't. And had I looked at them online, would I have seen something different? I don't know, but I can tell you the pencil felt very little different.
Well, I know you prepared, Helene, a bunch of charts for us to look at, and I do want to see them here in a moment, but for the newer traders out there, or maybe somebody that hasn't been in the markets quite, a few years, maybe not a decade, the newer trader, if you could go back and you can tell the earlier trader, Helene Meisler, like give her a suggestion, what suggestion would you give that newer trader, that new person looking at those charts? What suggestions would you give her?
Okay. The first is the things I've not learned in 40 years. Okay. I always say I will not retire until I learn to ride a trend. I can never learn to ride a trend. Learn to ride a trend. Okay. I'm not saying you should overstay your welcome, but learn to ride a trend, because that's really where you can make your most money. And to me, that's, and the other thing I would say is, my big thing is sentiment never changes, because human nature never changes. People get bearish at lows and they get bullish at highs, and it will always be that way. And I don't care what you say, because you haven't convinced me yet.
Yeah.
And so if that's the case, try not to get sucked in at lows and sucked in at highs, because that's a sure way to go off track.
So no FOMO for you.
No, but you see, that's where I have trouble, because there's a fine line between FOMO and riding the trend.
It's a good point, right?
And so I keep trying to learn when I should stick with it and when there's FOMO. So I am a base picker. I'm a bottom picker. I don't buy stuff. If someone takes a look at a stock that's up and says, "Isn't that a gorgeous chart?" I'm like, I see nothing in there. I mean, you show me a chart that's bounced over trend line 400 times and it's up at the top. I'm like, okay, I see nothing actionable, because I'm looking at it thinking, when's it going to die?
Right.
Because I'm contrarian and I would rather buy it before everybody gets excited. So what I say I need to learn to do is, after the breakout, don't keep looking for where you want to sell it.
Ride the trend.
Trend to take hold.
Ride the trend. Yeah, I'm gonna take a guess right now, and I'm gonna throw this out there, Helene. Helene's favorite chart patterns will be a rounded top and rounded bottom. Nice bases, nice top formed. And then we're going to just focus on riding those trends once they break out of those bases, right?
head and shoulders tops and head and shoulders bottoms. I see them everywhere. It's,
isn't it crazy? One of those things. And then you start singing the head and shoulders, knees and toes song, and then it's all over. Well, Helene, I want to say, I'm excited to see what charts you put together for us today. And so you can go ahead and take the screen and let's see what you got.
Okay, so I'm going to start with some sentiment charts. And the reason I want to start with sentiment charts is because, as I said, human nature in the market just never, ever changes. And we always get bullish at the tops and bearish at the lows. So in this particular case, people on Twitter will see me tweet out about the put call ratio, and invariably I'll get, that doesn't work. No, on a daily basis, it may not work. It may not matter from minute to minute, day to day. Okay. But what matters is two things. On the equity put call ratio, once you start getting, excuse me, readings under 0.4, you've really just gone too far. You really need to be having an eye on the exit door if you're trading. Because once you get down there, it's a very rare event that the market just keeps on going.
Yeah.
Okay. I mean, that's just the way it is. So what I do is I plot the equity put call ratio on a 10-day moving average. And what I want to show you, and I'm plotting it right here against the Russell, the IWM, only because the S&P is, in a world of its own because of, the 5 stocks that move the index.
Right.
So you can see people were too bullish down here, right? We got too low because when the 10-day moving average line gets to 0.41, you know that you've had some readings too low. And we did have several readings under 0.4. And you see that coordinates with that high. But what I want to point out now is how high this is. And the last time it was this high was here, and we got a rally. And then obviously it was high last fall, which were these twin lows here. I'm waiting for it to peak and roll over. I would like that. I believe it will do that in the next several days. So far, it hasn't. So I think in terms of sentiment, and certainly on a day like today, it's not going to do a lot to get people terribly bullish. If we take a look at, and let me just preface this by saying, I'm not a big fan of the American, I forget what it's called, AAII.
Yeah.
But I don't like it because, first of all, there's nothing scientific about the poll. They don't know how many people vote every week. It's a lot of day trader feeling. And quite frankly, let's face it, how many young people care about AAII anymore? Not many. However, be that as it may, the bears are now up, kissing almost 40%. That's a lot. The last time we had a series up here, you're looking at that September low. So I think that's a big deal. And prior to that was after the big sell-off in February last year. Okay, so in terms of sentiment, I also take a look at the investors' intelligence, and they're only at 43% bulls, which is quite low. And today, NAME, the National, now again, I can't remember, it's Active Investment Managers.
Yeah.
National Association of Active Investment Managers. Every week they get polled on their exposure, and the polling is on Wednesday morning. So it's, and they release the data on Friday. And so the data is the freshest that you get in any of these polls. And their exposure is down to 52% this morning. At the September low, they were at 55. At the May low, they were at 42.
So,
and I should tell you, they spent almost the whole month of November over 100.
So, Helene, can I ask you this question? And I want you to continue on, but you're showing us like recent sentiment, and there's a lot of bears, maybe too many bears in the market, but here we are at all-time highs right now. So, what is that telling you right now?
But stay with me.
Okay. Good.
to show you how much weakness there has been under the surface, and I mean a lot of weakness.
Sure.
This is, I call it my intermediate term overbought, oversold oscillator. You don't get, and it's based on the breadth of the market, you don't get a move where it takes out the lows, and it even took out the September 2020 low. I mean, you haven't been this low since March of 2020 now. I mean, obviously you're still far away from there, but that tells you how much weakness there has been underneath the surface. I see all these statistics. It's, how many gazillion stocks are down 40%, down 50%. That's again why I'm not matching stuff up against the S&P, because the S&P is controlled by 5 stocks. If those 5 stocks go up, the S&P goes up, and vice versa.
Sure.
So I'm not that concerned. But this shows you how oversold we are on an intermediate term basis. Now, let me just say that I think this can go lower in the coming days. But my notes say, as we get towards Christmas, so about a week, this is going to make a low. Okay, just math behind it. I do the math behind it, and the math says it's going to turn up, which makes it, we're getting to an intermediate term oversold near Christmas.
Interesting.
Okay. And I have another indicator where I do volume. And it's the amount of upside volume relative to total volume. And again, here, you ask me, the S&P's at all-time highs. You don't get a move down here if all the volume in your stocks is on the upside. This is what you get when the volume is on the downside.
Yeah.
Okay. So, and even in bear markets, even in the worst of 2008, you got the lowest you ever get on this, because it's a moving average. The lowest you ever get is the upper 30s, low 40s. You just never get any lower than that.
Interesting.
And this, again, over the course of the next week, should bottom out in this low 40s area. Okay. Now, you see NASDAQ, this is the 10-day moving average of the number of stocks making new lows on NASDAQ. The peak reading was, almost 2 weeks ago at 732. That's a lot. You don't get that many stocks making new lows if they're acting great.
Right. I mean, this is pure evidence of you talking about the massive amount, or just a very few stocks. I meant to say that are outperforming right now.
Right. That they just don't go down.
Yeah.
But now, if we can just take a minute, it peaked just a few days ago, and it's heading down. If it starts to head back up, I'm going to get quite concerned. But when I just looked recently, probably within the last half hour, you weren't even over 150 new lows. So with that in mind, chances are this will continue to come down. Okay. If you really want something to be bearish about, and I promise you, this is something to be bearish about, this is the breadth of the market. Again, it doesn't slide like this in a healthy market. Okay.
Good point.
But so I think this overall, this is bearish. Overall, a lot of the stuff is bearish. However, we're getting to the point, I think, over the course of the next week, where sentiment is getting too bearish. We're going to get some pretty good oversold readings. And if we can start to get all those stocks that have been down, holding and not making new lows, I don't care, take the Apples of the world down, because they're hidey holes anyway. I mean, they're over-owned, over-loved. I see people yesterday recommending buying calls on Apple. Are you kidding me? I mean, to me, I just don't get that. But again, I don't get it, loving a stock that's up so much already. It's just not my style. So that's kind of where I'm at in the market. On a short-term basis, I call it a coin toss over the next week. I don't really have a very strong opinion.
Well, Helene, what you just showed us, in my opinion, is a great framework of what you use to work with to help really develop your trading theme on how you want to attack a day-to-day basis is saying, I'm looking at this subset of indicators and sentiment that really suggests that, hey, I do want to be bullish. I do want to be bearish over the next couple of days because of what I'm seeing here. And then you can find the individual names to trade. Is that correct?
Yeah. There's an old expression in the stock market that corrections are the market's way of changing leadership. And it doesn't, obviously with the fact that, as I call them, the Fangorama stocks have been hot as could be for years now. But if you just stop and think about how awful those stocks were through most of the spring, from the February high until May, my God, in May, every single person you heard was, you can't own technology, you can't own growth stocks, you can't, and that's, if you go back to those sentiment indicators I was talking about, that name exposure number got down to 42. Why? Because that's what they all own, and they all got scared. And so, that whole correction from that February high was the market's way of turning into all the stocks that were economically sensitive, infrastructure stocks and all the rest of that. And they left those growth stocks for dead. But then the growth stocks came back into favor, and they've pretty much been in favor, at least the big cap ones. The smaller cap ones have really been going down since the summer. And so to me, now you're just having catch up there. So what's happened is the change has been to defensive names, soaps and cigarettes and food and that kind of stuff is now drugs. That's what's in vogue now in the market. So again, to me, you're just getting a change in leadership.
And so that'd be a healthy correction in a bull market, correct?
Yeah, I will leave it to the people who write narratives to say whether or not we're in a bull or a bear. But I look at this chart, that's a bear market.
That's a little scary, right? So, what I loved about today, Helene, is this allowed myself and other traders to peer inside of what makes up Helene as a trader, because I see you on social media, and I'm sure a lot of people watching this video have seen you. They've seen what you post, and they're like, well, how does she help frame her decision making? And I think this is a really great look inside of the mind of Helene Meisler. So Helene, if I'm a trader and I'm watching you and I'm like, holy cow, I've seen her all these years, but how do I follow you on Twitter, and how do I get to your column on Real Money?
Okay, on Twitter, I'm at Meisler, Meisler, and you can just go to realmoney.com and plug my name in, and my column will come right up.
Awesome. Well,
even my Twitter bio has a click through to it.
Oh, cool. All right. Well, and for those of you that don't know, if you're watching us here on the Trader Summit site, you can actually click her profile. It'll take you over to her profile, then over to realmoney.com as well. And I want to say, Helene, being able to talk with you in person, meeting you like this has been awesome. And I'm so excited because I think this is going to give a real great education to a lot of traders that have seen your work over the years. And I really appreciate you being with us. And I hope as we go into 2022, we can, meet again, and we can kind of get your updated views on the market.
Yeah, I would tell everybody one other thing. If you are following me on Twitter, on Saturday mornings, I do something I call Saturday Chart Fest, and you can sign on anytime. I start posting the charts around 5 or 6 a.m. Central Time, and you just go to my timeline and you'll see a lot of these charts that I've just showed you, in addition to index charts and ETFs.
That sounds like a great time to be drinking coffee and seeing some chart work from Helene.
Yeah.
Well, Helene, happy holidays to you. I hope you have a happy new year. And thank you so much for joining us here at Trader Summit. Remember, if you're watching this video on YouTube, give Helene a thumbs up, subscribe to the channel so you don't miss any more of our content. Helene, thank you so much for being here today.
Thanks so much for having me, Blake.
Have a great one.
You too. Bye-bye.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.